Welcome, dear traders. You are watching a recap of the Asian session on September 4. Despite the lack of important economic news, Asia's stock markets are rising today on news from China. On a Monday, the United States and Canada markets are closed for the Labor Day holiday. This could set the stage for a smooth start to the trading week. In addition, last week's U.S. economic reports reinforced expectations of a soft landing. Labor market conditions have also eased, as evidenced by the non-farm payroll report for August. Moderate inflation confirms that the U.S. economy is cooling down gradually. Moreover, the Business Optimism Index showed that U.S. manufacturing activity improved slightly in August. However, it was the 10th consecutive month of decline. Against this backdrop, the odds that the Fed will make a rate hike at its September 20 meeting are diminishing. As the CME FEDWATCH tool showed today, a majority of 93% believe that the Fed will keep its key rate unchanged. As for the Fed's November meeting, the probability of a rate hike has dropped to 38% from 53% a week ago. In Asian trading, the US dollar index stands above 104 after 2 consecutive sessions of gains. The greenback is now trading within a narrow range of 104.00 and 104.30 against its G6 basket counterparts. However, the US currency remains close to its 2-month high of 104.40, reached on August 25. As the US market is closed today, liquidity is expected to be low. Investors are in no hurry to pour large amounts into the market. Last week's economic indicators showed that the fall and rise of indexes in different directions balance each other out. Given the weak forecast of the US Fed rate hike in September, the greenback has few chances for growth. While the likelihood of a hawkish action from the US Federal Reserve is diminishing, the Chinese authorities are taking further steps to support the real estate market and the yuan exchange rate. Financial regulators have lowered the minimum down payment ratios for first-time and second-time home buyers. Banks have also lowered interest rates on existing mortgage loans. In addition, Reuters reported that China was likely to step up measures to revive the country's real estate sector. Meanwhile, near-bankrupt Country Garden was able to negotiate with the creditors to defer payments, although China Evergrande's experience shows that such a measure provides only short-term relief. The developer's attempt was well received by the markets. Against the backdrop of optimism in China, Australian and Japanese stocks rallied. Japanese stocks rallied on growing expectations that the Fed may halt its rate hike cycle, amid signs that the US economy has cooled over the past 2 weeks. Investors in Japanese assets have benefited immensely. In the same time, the yen and stock indexes received support from a hawkish hints from the Bank of Japan, and the regulator is expected to protect the Japanese yen buyers. Meanwhile, investors buy Japanese bonds during the downturn, and this reflects expectations that the US-Japan yield differential will be driven by the policy divergence between the two central banks. On the other hand, Kazuo Ueda's recent comments may have ruled out any premature policy tightening. Bank of Japan governors have warned that inflation has not yet returned to the 2% target. However, hopes for underlying price pressure to increase are not too high. Moreover, the deteriorating outlook for economic growth outside the US means that there makes no sense for the Bank of Japan to rush into policy change. The yen may continue to lose ground against its US counterpart. Although the bullish trend of the dollar-yuan pair reversed on Friday and the price returned to 146.30 earlier this week, and the pair's price movement resembles the movement of the US dollar index. The only difference lies in the fact that a rise in the price means weakness of the Japanese currency. Despite the lack of volatility at the start of the trading week, the Japanese yen was under pressure from the US dollar in the range of 146.00 and 146.50. Surging above last Tuesday's high, the pair may test the level of 148.80 again. And the next support level is at Friday's low of 144.5. The antipoding countries are moving almost flat today. This clearly shows how much the US market influences these currencies. The Australian dollar inched higher within the range of 0.6442 and 0.6482 amid positive news from China and the Reserve Bank of Australia's decision. The RBA meeting will take place tomorrow. Given that the central bank's recent decisions have been alternately hawkish and dovish, some investors are waiting for the final figures. Meanwhile, the Aussie closed Monday's Asian session at a 0.6460 on a bullish momentum. The Kiwi-dollar pair has shifted to the bearish territory of a 0.5938 and 0.5962. In a Monday's Asian trade, the New Zealand dollar closed at a 0.5940. And that's all for now. Leave your comments down below and don't miss our next video review. Remember that staying up to date is the key to success in trading, and see you online soon.